right, can you hear me? Awesome. Okay, so let me say this again since you couldn't hear me before. I said something that I forgot to mention at the beginning, and that is a disclaimer that I am not a financial advisor, nor I possess any securities or exchange license like Series 7, Series 6, or 67. I don't have any of that stuff. I'm not a financial advisor. So everything that I'm doing on this webinar, take it for educational purposes only. I am not giving you advice on how to manage your money or how to invest your money. I'm just sharing education based on my experience on the markets and technical analysis. Very important for all of you guys to understand that trading is a risky business, meaning that you can lose all or even more than what you have invested in the markets. So be concerned and be careful how you manage your risk, as it is possible for you to not only win big, but to lose big. So for that reason, I assume no responsibility, but you assume all responsibility on the trading of your money. And all I'm doing is just giving you educational training information. So now that I have that out of the way, I was sharing, let me see, I think I have a chat. What I was sharing that to take, understood. Yes, I am using Fibonacci's, and we're gonna see Fibonacci's in a minute. And we're not gonna cover the whole team of Fibonacci's, but I will try to show you at least how to draw them on the charts and how you can create them on the different levels. So the 1 hour chart is going to allow you to clearly see the ongoing trend, and is going to allow you to clearly set very strong support and resistance areas. The markets move from support to resistance and back and forth. It will either break the resistance or it will break the support if the trend is strong enough and the price is ready to move to the next level. But for the most part, as you can see here, and I'm going to delete all of this so I can at least I'm gonna make these support areas with you guys so you see how I do it. And let me take this one out. This might be a 52-week high. I'm gonna leave that one up, and you can change the time frame on MetaTrader. On the right hand side, you'll see all of these. When you download MetaTrader, it's gonna be in the top like this. It's gonna be right there. I like to personally drag it to the side and then just put it right there. Okay, right there. You do it with your personal preferences the way you want. But as you can see, I'm on a daily one, which is the daily the daily chart. The 4 hour is the next most important time frame that you want to look. And as you can see on this Fibonacci that I trace on this chart, look how almost to the teeth is been moving from one end to another end, one end to another end, and it is kind of easy to predict the move on the 4 hour chart for your entries. On more advanced, and I'm gonna share with you real quick how I really take my trades. I use the MetaTrader, but I use this right here. And it is it gives me a much better picture how I take my trades. But this is very advanced, and to understand what's going on, it's going to take quite some time before we get there. Bottom line is that I've learned throughout the years that the simpler that you keep your strategy, the better. And as I stated a few minutes ago, what you're going to learn with supply and resistance and areas and the ongoing trend for entries is going to be more than enough for you to make money. By the way, if you see this number here, that is the number of pips the candlestick is moving. And if you don't know what a pip is, I'm going to post a link on the group for you to start studying some of these concepts and terminologies of Forex from one of the most complete training that it's out there, which I already told Michael is called Baby Pips, and he just put it on the chat for you to see it. So, Sammy, I don't know if I've told you this, but babypips.com is a fantastic resource for training in all of the theory of everything that you're going to be doing on the astro chart. But the pip counter is something that I'm going to post on the website, and you can have access to it for being able to count how many pips the actual candle is moving, which is very helpful to know where you are in regards to the actual move of the candle. So let me see here, and I'm going to start with nothing on it. This is what we call naked chart. I don't see anything but the actual graph. And Michael, since you've been reading for some time right now, what do you think that market is doing right now? And what is the terminology we use in the industry for the way that the market is right now? Do you know? Do you have an idea? Sammy, do you have an idea? Okay, now check this out. All right, I think I have something else. Bearish, okay. So this is the 4 hour, and it is yes and no. It is actually what the market is doing right now. It's called a range, and it's not really bearish. It's not really bullish. It is in range. So in other words, the market is going up and down. And this is very important because this is a type of trade that you can develop as your only strategy and make money. And let me tell you something. If you find only ranges, which you're going to find them a lot, because the market moves in, as you can see here, these moves, which are from here all the way to the bottom here, or it moves up, but for the most part, it just simply goes in range, up and down, up and down, up and down. And if I go to many other pairs, which I'm going to do in a minute, check this out. This is the Australian dollar and the Japanese yen, if I go to the US dollar and the Japanese yen, look at that big drop that just happened of 42 pips. And this one, I can tell you, it is not in a range, but it is in an uptrend. So this one is even though it's dropping on the candle, the actual trend is a bullish trend. Look at that. This candle should stop here once it reaches this number. And once it reaches this level, it might go back up. Now, I don't know why it's moving so much on a Sunday night for the US dollar. Oh, well, never mind. That is the Japanese yen. Japanese yen today is Monday for them. Right now, it is about 11 in the morning in Japan. So they are the ones moving the market here. So I take that back. That's why it's moving so well and so nice. Now, this is the 4-hour. Now, if I go to the daily, look at that trend line, how accurate it is where it's stopping. So I'm expecting this to stop right at this level, and then guess what's going to do? It's going to go back up. Now, right now, this is the trend line, but look at this. It is right at about to hit that resistance, which is right here. Let me zoom in. And resistance, I mean support, this is a support. Strong supports are the ones that has been tested previously. And if you see this, wait a minute. Okay, check out this point, how this support has been tested so many times by the market, and it bounces every time it touches that. So this is a very, very strong, and this is on the daily. Remember I said, you wanna find your levels on the daily, because that's where the market either began or ended a day's worth of movement. So it gives you a very clear indicative of what happened that day in the market. And so this can very clearly be seen as a, look over here, this is the support, the high support. And I can actually put it right here. So guess what? You can keep an eye to this pair, and after you trace those lines, see if it breaks this support and goes all the way to the trend line. And if it bounces back, it will potentially go all the way back to this level. And it will go from here back over here. And look what happened here. Look, right now, it's on this level, which in the past came to the same level. And look how the price action closed on this red candle, and it opened on this white candle, only to have a higher high with the following candles to continue to push price up. And look what this candle did right here at the resistance. It broke, and look at the size of this candle, and then look over here, the size of these two candles. And those are what we call indecision candles. So it went with strength all the way up to hit the ceiling, and then it went kind of indecision to only go back down, try to retest the area, went back down, try one more time until he gave up, and it dropped all the way down here. And now it's heading back over there. So you might see this candle dropping, but the bias of the market is actually going up, not down. And this is where most rookies lose their money, because they see this candle dropping and they say, well, it's time to sell, only to find out that they're about to enter the market when it's going to potentially reverse to the upside. So how do you identify levels in between? And what I do for that, I go to the 4-hour chart after you identified your daily levels. Look how you can see over here very clearly. This is how far we are from the support of that trend line. I can count that I'm about 32 pips away. So if I wanted to trade this, I could potentially hit sell and look for a target profit of, let's say, potentially 20 pips, and I should be fine. Now, it's at a point where I will not do it. I will rather wait until it touches this, and then I see the price action on the 4-hour candle on the next candle, which it will be sometime either on the London session at 3 in the morning or like around 1 in the morning. I would like to see what the market tells me if it's going to change direction to the upside, and then enter on the long side. Now, if I want to know what other important levels should I be looking, that's where you use the Fibonacci, and with this we're going to finish. We're already almost, we were past 9 already. But the Fibonacci, you want to trace them from the lower points or the higher points all the way to where it's at. And I like to trace them on the 4 hours. That is just me. You can do, like I said, as you wish. But if you trace that all the way to the top from here, notice something. Look at the levels that the Fibonacci clearly shows. Look over here. It went up, and then at the 50% retracement, it indecision on the bulls side. Then he dropped to the 61.8 level to then go back up, break the 50, and then come to my daily. Remember this red one, I placed this on the daily. So this is the daily support. Look how accurate, almost to the size of a nail. That thing just stopped right on it. Then he ranged for, remember, each candle is 4 hours. So you can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11. That's almost, how many days is this? About 2 days, the market stayed in range. 2 full days. It did not move from this level. Only 2, which it always happens the same way. The market always waits until it gets tired of waiting, and then it moves, and then it dropped all the way down here. And then you can see that it tried again. So when you put your Fibonacci levels, it can help you identify where you can be looking for potential entries or potential weights on where you're going to come into the market. So again, this is the US dollar, Japanese yen. You can take notes on this, and as you downloaded your MetaTrader, feel free to follow this and trace your lines and keep an eye on it. And then, you know, if you want to, you know, you're going to be buying, so you'll be clicking here. And if, you know, your first level, if it reaches the 50% retracement right here, then you know when it goes back up, it's going to stop a little bit on the red one, because that's going to be a resistance. So that's going to make it stop a little bit. Then when it breaks, it's going to go to the 32, 38, and then it's going to stop a little bit. And it might come, by that point, it will be somewhere here. And then if it breaks on the upside, it will go all the way to 23, and then all the way to 0. And if it breaks the 23, and it fails to break the 0, it's going to drop, but it's going to drop much lower, less of a drop. It's going to be much lower, because not lower. That doesn't make sense, because lower is the drop is going to be shorter. It doesn't make sense in our language, but it's not going to be as big as this one, because it's going to be finding this trend line somewhere here, and then it will break on the upside to potentially continue on to that trend if it doesn't reverse. Real quick, this is the Canadian dollar and the Japanese yen, and you can see right here is in a perfect range. Actually, let me go back to daily. I am on 4 hour before I put these supports. And actually, that's right here. And then let me trace. Right there. Now, this right here, it's not showing me, by the way, it's not showing me any movement, but I was going to say, by the way, when you trade ranges, you want to trade either from the top or from the bottom. Don't take the trade from halfway, because when it's halfway, look what happened here. Let's say you are a range trader, and you went in, it touched this level, and then it dropped, and you're here. Now, when you start reading candles, you understand that the size of the wick tells you the amount of resistance of, in this case, the amount of buyers that were present versus sellers. So if you see here, the size of this wick is the half size of the actual candle. But look what happened. If you enter here because you're saying, oh, it hits the resistance, now it's going to drop all the way here, you're up for a trap, because it's going to go try to touch that resistance again, to drop again. And then check this out, guys. This is the market makers. This is how they make liquidity, by taking your money. So if you are here, you notice it went down, then it goes up, then it goes down, and look at the size of this candle. It's gigantic. Let me make it bigger. This candle, it's almost the size of all these candles. So in one day, the market went up what it took 1, 2, 3, 4, 5, almost 5 days to move. And so only to reach this level, and guys, this is what we call a bull trap. This section right here. This is where most people get trapped, and it's all done by the big banks to take your money. The market makers, they know that they are what they call breakout traders. They are waiting for the breakout of a trend, or I mean of a support, of a resistance to go in. And if you see this, you'll think, wait a minute, one try, second try, third try, and it breaks, and it opens up this candle outside, which means this resistance has become support, and now it's over here. Guess what a lot of traders do? They start buying because they think it's gonna go up. And so look what happened. They set up their stop losses right here. Let me put that like this. So they set up their stop losses right here. And guess what? The market goes back up, and they start celebrating because they feel that they're going to be rich now. They're going to be able to buy all the things they want because they catch this trade from the very bottom, only to find not enough buyers at this level, and the market, to check this out, if you would have entered here and it drops all the way here, this is catastrophic. These are 353 pips. Unbelievable drop. So, and then if you are here and you see the candle open up here, look at this manipulation. This red candle, if you are in it and it starts going against you, it goes all the way here, and then it rejected this level and it went back up. So now you start breathing because you're like, oh, it's gonna go back up, only to open the next day and then it sank and it wiped out your account. And this whole section here is called a bull trap. So for that reason, you always want to enter the ranges after it's been tested. One, if you enter here, you can enter short and watch the price action, because the minute it comes to this level, you know, when you go from one level, it goes to another level. So if you know you already touched this level and you enter short, you're gonna look for the next level, which is these candles right here. And you know that you're gonna be looking at price action when it hits this level. Because look what happened. It touched that line and immediately the next day it went back up. So if you short the market here and you see that it touches the line and it opens this level, guess what you do? You get out, you close your position, you made your money. And now you are satisfied because you made a successful trade from this resistance line all the way to this level here. But you close your position and you wait to, now at this point, if you close your position in this range, you don't want to come back in because you're in the middle of the range. Now you want to watch the price action and see how it moves. In this case, look what happened. It went up here, it touched again the resistance, And guess what you do? You can short the market because this candle is telling you that price was rejected and it went back and dropped. But look what happened this time. Look at look at this support. Price broke the support, but it came back up. And then you have this big open, which again, if you enter here in a short position, you know you're gonna be looking this as your target profit, and you're gonna be closing your position when it hit this. Some traders, and this is more advanced, I'm not gonna confuse you, but sometimes what we do is that we close 50% of our trade and we move our stop loss to break even somewhere around the next closest level. So if the price goes back up, it closes my other 50%, and I didn't lose anything, but I won 1.5 my profit. And so that is just basically, guys, how this type of trade can be done. And it's very, very profitable when you only trade support and resistance and combinations with price action. If you have your Fibonacci levels, your support and resistance, and you understand the psychology and dynamics of the market, you will make lots of money. So guys, look over here, and with this we finished. Look at the market maker, got an entry, but the level again, and this is where we are now, the level is telling me that continues to be strong, and it dropped. So when it gets here, guess what can happen? It can go back up or it can break down. This is what I will do. I'm not going to tell you what you're going to do, but this is what I will do. I will be watching for the market to come down here to this support. And if it gets around this area, let me mark it like this. This is the area that I'll be looking for some interest for me to go back on the upside inside this range. As the price comes down all the way here, then at that point, I might be looking to go long over here. Now, if the price reverses at this level or in this zone, which we can just call it the zone right here, I'll be interested to see if it goes back up. And if it goes back up, I will probably not trade the short because it already tried 1, 2, 3, 4, 5, 6, 7, then 8, 9, 10. This level has been tested way too many times, and it keeps resisting, but I don't know if the next time will resist. So, by the way, the best entries are resistance is the first and the second. Everything after that is the risk, or like I said before, the probabilities of honoring this resistance diminish greatly. So if it breaks this level, look what I will do, guys. I will wait. Let me see. I will wait. Where are my drawing tools? Let me do this. For price to do something. For price, let's say it breaks right here. I will wait for the price to do this. It goes up to this level right here. It's gonna go up to that level, somewhere there. And then guess what's gonna happen? It's going to come back down, and I will be looking for a bounce of this. So you see how here it came back down, but it did not bounce. It broke right through into the range. If I want to go long, instead of going long like these guys that fell into the bull trap, if I want to go long after the breakout, I'm going to wait for the breakout up, they come down, and then if it bounces back up and it makes a new high, then I go long, because I know it finally broke this supply, this resistant area after the bounce. So guys, thank you very much. Let me make you aware that the market, it's not something you're going to learn, not even in a year. It's going to take years and years and years to learn this thing. But I want to encourage you to stick to it, because it is a fascinating world that can create a fascinating income for you and your family, and for what God wants to do through you, by you, and for you in the kingdom of God. So, and I'm saying that because I know the people I have right now. I can see that my friend Ruben.
Sí.
Papi, ¿cómo estás?
Bien, bien, gracias a Dios. ¿Y tú?
Excelente, papi. He is from Dominican Republic, and he just joined the meeting. Unfortunately, my friend, ya estamos terminando. We're almost done.
Yeah.
I am recording it, so I will post this video on the group either tomorrow or the next day, so you guys can review it again. Okay?
Thank you very much.
Absolutely, my friend. So, in summary, guys, we shared how to read the economic releases, where to look for, how to look for the market's bias, support and resistance on dailies, and entries on the 4 hours. And look how clear, by the way, it's just beautiful. I love this thing. I hope you love it. I have a passion for it. But when I see this kind of thing, I just get excited. Look